Alright, so in this video, I'm going to teach you a better way to invest your money than how the rich are investing it. So, we're not really going to pick on PWL Capital. They probably do great work. Basically, they have great advice. They're IROC licensed. I used to be IROC licensed. This is where you're going to get people who can help you buy ETFs and stocks and real bonds, that kind of thing. So if you're not with an IROC licensed advisor, if you're just with the regular average bank person, guaranteed you can take care of your money better than that guy. I've shown you in so many videos, and I'm going to show you again in this one. How to take care of your money better than the rich are. This firm's a boutique. They're only going to take care of high net worth fund, you got to have $1 million. Or, if you don't have that, you probably got to be saving like $10,000 a month. They're helping the big clients. Look at all these people dressed in nice suits. This firm probably takes care of hundreds of millions of dollars, maybe even $1 billion. And basically, they show you, how they're investing your money in all these different asset allocations. And they're showing you the performance. I'm going to show you exactly how to beat it. So they're very open and honest with how they invest their money. That's all people want. They just wanted to trust, hey, is my money safe? Is it in good hands? And is it going to grow? Basically, that's all when it comes down to it, nuts and bolts, that's it. Am I safe? Am I going to make money? So, yeah, basically, why you give people like this your money, that you just have designations. MBA, CFA, CFP, CIM. These are all great. The CFA, basically, that's what I made InvestCan. Shows you where to put your money, how old you are. Basically, I'm trying to mimic a pension. CFP tells you how much money to pull out every month. This is your financial planner. This is what RetireCan's for. How much money do I pull out for the rest of my life? But yeah, this is why you give, this guy just knows more than the guy you're sitting in front of in the bank probably. 99.99% guarantee. So anyways, you probably heard of Ben Felix. He's on YouTube, pretty popular. Basically, he's the man who said dividends don't mean anything. And I know you guys don't want to hear it. Dividend investors, I thought you guys were the vegans of investing. But covered call wins that prize now. How do you tell if someone's a covered call investor? They'll tell you. They'll tell you. So now I agree with about, let's say 95% of what Ben has to say, but I disagree. He doesn't like gold. I like gold. Ben doesn't like gold. And I'd say Ben doesn't agree with asset location. He says your after-tax asset allocation is riskier, and I say, no, we're just using your money more efficient. You're looking at it, you're on the wrong side of the fence. Look at it as efficient, not a negative. So they have the podcast as well, Rational Reminder. There's probably better material to help you build a portfolio, in the earlier episodes. But it's a great podcast. I wrote a lot of my articles on my website while listening to this. Basically, yeah, they're not going to tell you what ETFs to buy, but you can find it in here. I showed you a video before on Ben, how to beat that portfolio. So, yeah, and they just started another podcast, The Money Scope. But if anyone has a corporation, and if you're a DIYer, you'll probably get some good information in here, how to, more tax efficiently have a business. And PWL also has Bender, and Bortolotti. These guys right here. All nice suits. This is why people trust big money, trust these guys. And why I say that is you probably come across their blogs, The Canadian Couch Potato. It's written by Dan Bortolotti. It used to be better before. The model portfolios kind of suck now. But yeah, I've shown you many ways and wrote a model portfolio article. You can find that on Money Guy now. And they also run the Canadian Portfolio Manager. They're just helping you, the DIYer. They are. But I'm putting out better information than this, guys. Thousands of people have been on my website this month. It's insane. But yeah, they also run this YouTube channel. And should you dump your all equity ETFs? Yes, they're garbage. I've shown you so many ways how to beat it. All right, let's get to the meat and potatoes of the video. How do we beat PWL? I mean, it's only came up a couple of times this year, but yeah, people ask me, what do you think of PWL? And then I say every time, like, great advice, like shit performance. These funds aren't performing well, but if you got $1 million and your account still goes up 100 grand, I mean, that's enough. So what I'm bringing up right now is they only use global fixed income. I mean, this is just like InvestCan. If I had to choose one fixed income product, it would be a global fixed income. So this is like the only difference between PWL and a bank. In a bank mutual fund, you're going to see like more Canadian government and Canadian corporate bonds. And the other thing I don't like about these portfolios is they're using US hedged. I mean, that's just dumb in my opinion. Like, what are we doing here? Why are we buying both? So, yeah. And how do we beat it? I mean, let's build, we're going to build a 60-40, 80-20, and 100% stock portfolio real quick. But let's look at the numbers here. So 60-40, we're trying to beat 5.51, 6.74, and 7.95. So let's jump over to Portfolio Visualizer, do back tests. Say we got $1 million just like these rich guys giving PWL their money. Rebalance monthly, reinvest the dividends. We're just going to use XWD. This is a global equity. Like, it's going to take care of your stocks. Like, there's Apple in here, Microsoft, Nvidia. Like, you name it, it's in here. We're going to put 60% in that, and HAF. This is an active global fixed income product. That's all it is, guys. These are great investments that keep winning year over year over year over year. So anyways, let's analyze these. A 60, 40, 80, 20, 100% stock portfolio. What we can see is the 60-40 has a compound annual growth rate of 7.31. This would be the 80-20 has a 9.09 and a 10.84 for the 100% stock. Now, this is not a 10-year time horizon. Like, we can see even further back. So to really pair off, like, how well are these funds doing, we got to look at the 10-year. So this 10-year number, 7.3, we were trying to be 5.51. Sounds like we did it. All right, now we're going to use 9.0. What number are we trying to beat here? 6.74. Sounds like more money to me. And going to the stock portfolio, we got 10.70 and we got 7.95. So as you can see, I mean, just buying these two ETFs will just do better. And all you got to do is use RetireCan and pull out your money efficiently like a pension. Like, that's all it is. That's all financial advisors are helping you out with. So here's how you beat the financial advisor. And just download that simple calculator to have so much more money. So much more. All right, now, that's $1 million in 2 funds. That kind of sounds crazy, right? Okay, I get it. And you'll be like, oh, I really want a little more diversification. No problem. So we're going to build this out just a little bit better. And you know what? Let's build 60-40s for all 3 of them. So just to give you a couple of different options. So ZGQ, this is the BMO all country high quality. This is a global, all around the world. Basically similar to XWD, but it's high quality. There's a lot more US on this one. And let's use ETHI. This is the global sustainability. Let's use a little ESG. This is the environmental, social, and governance funds. I mean, they're just trying to do better for the world, let's say. We're going to put 20. And what we're going to try is put some of our money in, let's build it like a bank. So we're going to use VAB. This is the Vanguard Canadian Aggregate Bond. This has government and corporate bonds in it. So let's say we'll put 20% in that and 20% in the global. All right, there's one portfolio there. Simple, easy, 5 funds, 20. Like, anyone can figure this out. Like, anyone can buy this on their own. Strong, true believer. Okay, and then we're going to try PSA. I mean, basically what you don't see in the bank, or maybe they're buying GICs on the side or an annuity or something like PWL. I can't tell you exactly how they do it. I mean, they do give you a little disclosure there. What did it say? For illustrate, like they might be a bit different, but this is the gist of it. I mean, they wouldn't put this up here if they weren't investing their money somewhat like this. So let's try a bit of cash. In this one, we're going to put 10% in, we'll put 20% in cash, 2020, 20, 20, 20. And you know what? I like gold. So we're going to put CGLC. You don't want to buy just CGL. You want to buy the one that's not hedged. Basically, in theory, it should just make a little more money, especially if you're investing 50 years. Like, we're investing a long time. Do you want to pay fees for 50 years? The answer's right here. So let's try 10% cash, 10% gold, 20% in global, and then the same. We're just going to put around the world quality companies, and you can play around with these. Like, maybe you want to, tilt your portfolio a little more ESG. Then you'll let's just try it out right now. Let's go. You know what? We're going to do all high quality and all ESG, and get rid of XWD, the one I never shut up about. All right, portfolio 3 with a little bit of gold and no XWD is the winner. I mean, this is why we put gold in the portfolio. The gold's the difference. So anyways, when fixed income lost a shit ton, gold was the hero for I probably would say about 2-3 years now. So we can only see back a few years, unfortunately. We got a 3-year annualized return of 5.43 is actually the best. But we're just going to use the one with gold, 5.40. That's what we got to beat on a 3-year. 4.84, beats it again. Gold. ETFs, buy them on your own. Take care of your money better than the rich.